Happy New Year, everyone. We welcome you into a new edition, a new year of Scrushy on Business. My name is Dave Green, joined as always by Richard Scrushy. Richard, Happy New Year. How was the holiday season for the Scrushies?
It was great. It was busy. It was great. Got to spend a lot of good time with the wife and children, and it was just great. It's just a wonderful time of the year. Not only just to celebrate the holiday and everything, and the birth of Christ, and then now the new year, starting a brand new year, but just spending quality time with family. And of course, I don't know about you, but I think I gained 10 pounds. We,
A
we
lot
ate
of
so
good
much.
eating.
A lot of good eating, man. So, I've started the diet. I think everybody does, and back to the gym, really hitting it hard. With a plan to lose about 25 pounds. Hopefully, I can. I'd love to, if that's possible. Then I'd be able to wear some of my nice clothes.
Well, as they say, Richard, 2025, I just wanted to lose 20 pounds. I got 28 to go.
That
But it
sounds like
is
me.
a new
Yeah.
year, and you see a lot of folks at the gym in these early parts
Mhm.
of the year. But I'm curious, as it relates to business, did you ever have any things that you did that were rituals for you as a new year would begin, or how you started a new year?
Every year, absolutely. Yeah, that's really a time to reflect on not only what you've accomplished over the last year, but making sure you have solid plans for the new year, and meet with your team. That's when you sit down and you say, "Okay, guys, girls, let's go over what we did wrong last year, and let's put together a plan to make sure we don't have a repeat on any of that. But let's also talk about what we did good and how we can enlarge that and how we can expand that and how we can even do more of that." So, yeah, this is absolutely a time of reflection on the past and also to focus on the future. So, yes, very, very important. And I found myself as I was out doing my daily walks over the holidays, thinking through that just personally. What are my goals for this year? What do I really want to accomplish, and how am I going to go about doing it and whatnot? And one of the things that I love to study, Dave, and we've talked a lot about it on the show, is the funding of transactions. And I will say this. One of our viewers did call me over the holidays. He's been watching our podcast, and he has a company that he is going to take public. And he said, "I've really enjoyed watching your show, and you've inspired me. And I want to tell you about my company, and you tell me whether or not you think this is a company that I could take public." And he began to explain to me. He had a little bit of loose ends out there. He was focused for the most part, and I would say 75% of what he's doing is, and this is important for our listeners out there to talk about this so they can kind of get a feel for it. He was focused on about 75% of his business. In other words, he had it. It was, this is what we're doing. But then there's this other 25-30% over here. It has not a whole lot to do with that main focus that he's doing. And he actually asked me about adding another business line. What did I think about it? And I listened to it, and that business line that he was thinking about adding has nothing to do with his core business. And I told him, I said, "No, if you're getting ready to go public, you don't want to do that. Do not do that, because that's a distraction." So when he would sit down with investors, that are looking at putting money into him as he's doing a roadshow and trying to raise money on an initial public offering, they're going to ask him, "What are you doing that for?" You see what I'm saying? So it's a distraction, and then how's he going to explain that? "Well, I just decided that I wanted to do that too." Well, here's the problem with that. I'm telling you right now, investors like pure plays, and you probably heard that, Dave.
Hmm.
They don't like somebody scatterbrained that's trying to be a whole bunch of different things, and because then you get focused on this, and which one are you going to put all your focus in, and where are you going to really grow it? How are you going to build an international and national company and scale it when you're trying to scale three or four different businesses? Because you're going to have different management teams on these. The people managing the core business, they ain't got time to go over here and manage all this other stuff. That's a distraction. So just it was just an interesting call. But after listening to everything, And he explained the size of his business and how he's doing and what he's doing. And he has met with the initial venture, investors. So I'm not investors, but bankers, investment bankers. So he's getting ready to hire an investment banker. And I told him after listening to it, I told him I thought it was a great idea. I really think that the young man, and he's in his 30s, he's just primed right now to build a great, successful business. And he has a few partners, but primarily his family had money, and they have put most of the money into the company. So they own a majority of the company now. So they'll have to take some dilution when they take it public, but they should be able to get a decent valuation because the business he is in it's actually a good business, and it supports other businesses because they have a huge AI software program that is working in the healthcare sector, and and they already have a pretty good lot of customers that are using the product. So his his product is proven. That's what I'm trying to say. So, and so when investors look at that and you're able to say, well, here are my customers and here's what I'm doing and here's how I price it and here's what my margin is. And he was telling me, I asked him the tough questions, Dave, you'll love this. I said, well, you tell me how much the business is going to grow over the next few years. How much do you believe you can grow each year? Because this is the way the market's going to look at you. They're going to say, can this business grow 15%, 20%, 30%, 100%? What can it grow? So he began to talk about that. He said, I think I can grow 30+% a year in new customers. And he said, just based on what we've been able to do. And I said, well, if you can do that and you're willing to sign on that and commit to that, go for it. And I said, and so he said, well, and then he asked me the real interesting question, what would be my exit strategy? And, for our listeners, that's when do I get out of this? And I said, well, let's look at it this way. You say you can grow 30%. When you think that you have peaked out and you can no longer grow at 30% and it becomes a 15% growth or a 10% growth and you don't think you can keep it going, I said, that's when you probably ought to be thinking about before you hit that. Now, you don't want to wait because if you go public and you're growing at 30% and all of a sudden you go out and you tell Wall Street, hey, we're not going to grow at 30% anymore. Now, they've invested in a 30% growth. And keep in mind that investors invest in future
Yep.
projections, not on what you did in the past, because they're buying into your future. That's what drives the stock price up. So when you come out and say, we're not going to grow at 30% anymore, we're going to grow at 10%, you're going to get a nosedive in your valuation. So you don't want to be in a situation where you wait and exit, And here's the other thing. There are always companies out there that are bigger and stronger and are very interested in, and they're looking to grow. They have to grow so much every year. So they're looking for acquisitions. And a public company merging into another company is going to give you a higher valuation anytime versus selling a private company. So it makes a lot of sense. But here's the other thing you don't want to do. You don't want to get so close to the dive that you get out and then the next quarter it drops. Because that's when the investors are going to come and say, now, wait a minute. You sold your stock, you got out, we lost money on the deal, and then the next thing you know, the plaintiff attorneys are all over you. They're suing you because you knew it was going to go down. So it's what I'm saying. I'm not saying when you know something is not going to grow. I'm saying when in your mind, as you're working so hard over a period of years, and you say, no, I just don't think I can keep this going. And you remember we had the young man on that the entrepreneur that had built the trailer parks,
right?
And he reached a point where he just didn't think he could grow it anymore, and they sold it. That's what I'm talking about. They just got, and that was a private company, but he knew when it was time to exit because number one, he didn't want to do it anymore. He was tired of it, and then number three, he didn't know that he could continue to grow it like that. So that's the thing that we have to be careful about. But at the same time, you will know if you really know that industry and you know the business. Now, here's another thought. Is there an opportunity to expand and diversify at that point where you can add on and grow this company where it makes sense. So you've got it doesn't have to be exactly what you're in, but if it can be connected onto it, you look at horizontal and vertical integration, and how do I grow this and expand it? And I'll give you an example. Uh, I was in the healthcare business. We were building rehabilitation centers for people who got injured on the job, people that got injured playing sports. And they got injured, and when they had the injury, they typically they had to have a diagnostic test, right? They would go get an MRI and an
MRI.
X-ray, and they a CAT scan, whatever, and they would determine, well, you got a break, or you got a this, or you got a that, and we're going to have to do surgery. That was the next thing. So you have a diagnostic test, then you have surgery. Well, after you have the surgery, they put them into rehab, right? So there's a continuum. So as I was building the rehabilitation business, I began to think, well, you know what? If I'm going to grow, why don't I go ahead and add the surgery in? So we do the surgery, and then we guarantee after we do the surgery, the patient comes to us for rehabilitation. And then over a period of time, we said, well, we ought to do the testing too. So we added the diagnostic testing. So we built the imaging centers and bought imaging center companies, and we ended up with several hundred imaging centers all across America. So and then we also realized this, that most of these injuries were happening either on the job, or a lot of them were athletes that were getting hurt. And we were doing a lot of orthopedic surgery. So we took a look at how many high school, athletic programs, football, baseball, basketball, are out there. And then also colleges, universities, professional teams and whatnot. And so we said, well, we need to be in that business. So we didn't want to be in the business of owning a team or doing any of that, but we wanted to be on the field with them. So we went out and started working with schools, and we said, look, we'll provide you with athletic trainers. We have doctors that specialize in sports medicine. So we were able to then contract with schools, colleges, universities. We had thousands of contracts all across America. I think we had like 125 colleges at one time, and all kind of teams. So we had these contracts where we provided the medical care, and we actually didn't charge them to put the athletic trainers out there. They were an extension of our rehab centers, but they were there. And so they would work with the schools and they would help them. So it was a great service, but at the same time, it was a catchment program to bring those injuries into. So we got them for the diagnostics. They came to our doctors. We got them for the surgery, and then we treated them from a rehabilitation standpoint. So then we were able to build a nationwide business, and that's how we ended up in all 50 states and, every major city in America, all the MSAs. We had multiple programs. We were dealing with baseball, basketball, football teams, running, track, Olympics. We had a relationship with about 110 different Olympians that we had worked with. We had PGA, LPGA, but it became, you see what I'm giving you is an integration. You look vertically, how do we do this? You see what I'm saying?
Yeah. Makes perfect sense.
Yeah. And as long as you can explain that, Wall Street will get it. And as long as it makes sense. But if you say, well, I'm over here in the software business, but we're getting into the real estate business, well, how do you connect that?
Right. And we get this question a lot, which is, Richard, what do you see as the biggest mistake entrepreneurs make? And I think you hit on something obviously very important there, which is at the beginning, right? You can't go to that investment banker and have a 3-hour presentation and, we're going to do this, this, and this, because you can't do it all at once.
That's
you
right.
Start, as you said, with that main focus, and then you're able to branch out once you've proven that success. But if you walk in with, 300 different ideas, they're going to wonder, I've met those people, right? And there are a lot of them out there who are really good at coming up with ideas. But once they come up with that idea, their goal is to come up with the next idea, not really execute.
You're so right. And look, let me just be honest with our viewers, okay? You're going to really struggle getting that financed. And here's the sad thing. These people that have all these multiple focuses that are not connected, they're not integrated, they usually fail. I hate to say it. And then, mom and dad and family members and cousins and friends put money into those things, and they never get a return. And they're basically money pits. They need more money. And then this entity didn't do well, and we got to put more money in it. And that one didn't. We got to put money in that. So it it's a money pit, and investors continue to get diluted, or you keep adding debt. So you're right. And so Wall Street's smart. These fund managers, they're brilliant, and they didn't get their job managing $1 billion fund or a $2 billion or a $5 billion fund because they were stupid. They got it because they were smart, and they look for these things. I just got to share this real quick. I was looking at the global funding and really what took place in 2025. And it's been estimated that it was 425 to 512 billion dollars worth of actual money that went into the top investments last year, which included AI. It included fintech, building of infrastructure and programs to support financial institutions, lots of things along those lines, and health tech. Health tech was another one, and so very interesting. So I was looking at some of the evaluations, and I was looking at this one, and they had raised $25 billion put into this, and they had a $300 billion valuation. Well, just for our listeners, you calculate that and you say, well, if they put $25 billion into a company at a $300 billion valuation, how much of that company do they now own? Well, if you divide that 300 billion valuation into that $25 billion investment, it says they own 8.3%. So $25 billion. Now just think about this. I mean, this is mind blowing. $25 billion only bought 8% of a company. Now, and I kind of laugh at this because you know what, Dave, I would love, and I'd love to get a hold of that presentation that they made to Wall Street. Now, I think usually if it's public and they're out there making it, I should be able to find that, and I'm going to start looking for it on the internet so I can see what they said. Now, on the venture capital side, when you that of course that was not a public company, so that wouldn't be available, is it? And so what happens is on public companies, when you see the kind of money raised and whatnot, you usually can get access to that data. But on these private companies, they're going to sign an NDA, and they're not going to let anybody get a copy of that except for the people that they're trying to raise money from. So getting your hands on it's pretty hard. But I would love to see what they're going to do with the $25 billion, wouldn't you? And wouldn't you love to see how they pitched it to get a $300 billion valuation? I got to looking at it, and the top 70% of the money that was raised last year on the big deals was in AI.
Yeah, I bet.
So when you put hundreds and hundreds of billions of dollars into it, what the heck are they doing with the money? And what are they building? And so you got all of these AI firms, over 100 of them. And, so we go on Chat GPT and we find stuff out, or right now, I mean, you just Google something and it'll give you an AI report, right?
Right.
And so where's the brain behind all of that? And then all these other companies, what are they doing? And how are they tied into that? Are they separate from that? Or are they building their own center that would carry do the same thing that Chat GPT is doing and some of the others? What are your thoughts on that? I mean, this is crazy.
It is crazy. And it's, people see those numbers. And as you said, it's about future, because the next thing you're going to hear about those companies is how much money they've lost.
Exactly.
Right? Operating it.
None of them are making any money.
That's the thing. And you hear those, but as you said, it's about future. Now, you also said this a couple episodes ago, which is, AI is only as good as the next version, right? Because somebody's going to come up with something better and something different. And boy, I wouldn't want to be on the wrong end of the $300 billion projection if another company came in, and did something on top of that. So it's a very difficult space, but I would have guessed that's where a lot of the money went, because right now it's sexy, right? That's what most people are talking about and looking at it. We're doing it in our business. Where can AI help you in addition to what you're already using. We've said this before, but a lot of people are using AI. They don't even know they're using AI with different apps and things that they use in their daily life. But everybody is trying to figure out how can you use it to make your life easier, to cut down on your expenses, right? All of those things. So the more people hear that, hear buzzwords like that, the more money there's going to be involved in it
How,
and putting into it.
how does this investor get a return? They put $25 billion in. And I mean, I'm using AI and I don't think I'm not paying much for it, am I? I think I pay, what is it, just $10 or
Yeah,
$15
it's
or something.
fairly minimal for the ones that we would have access to. Yes.
Yeah, yeah. I mean, it's not like a lot of money. And I mean, and so when you start talking about 25 billion, and then where is this money coming from? Where did they get 25 billion to put into it? I saw where Meta put like, I think it was 14 billion in one of these deals and invested. So I know that the Elon Musk of the world and the Jeff Bezos and the Meta and all these other groups and Google and all, they have the billions and Apple and I mean they can put money into it. They can write a check for 10 billion or 20 billion dollars because they have those kind of resources. But I'm thinking about the wealthy individuals, just the average guy that's worth $1 billion. I mean, would he put 10% of his $1 billion in a deal, 100 million into an AI I don't think he would. I mean, I certainly, if I had $1 billion, I don't think I'd take 10% of 100 million and stick it over in something like that only owned 8.3%. So out of 25 billion, if I put 100 million in, I would own less than 1%. And I would put 100 million in. I
Yeah.
mean, 10% of my, so I mean, I could see those guys investing, 3, 4, 5, 10 million if you were worth $1 billion or 20 maybe or 50, but certainly you wouldn't give 10% of your, I mean, that I don't even think that would be smart. So I don't, and I'm looking at, where do they get the money? I mean, even, you look at even Trump's net worth. I mean, he wouldn't be putting $1 billion in anything. So I'm just, where's all the money coming from? I think it probably is coming from other countries. Uh, you've got money coming in probably from, Dubai and from Saudi Arabia and China and, other areas of wealth across the world, I would imagine. Wouldn't you think?
I Nothing surprises me these days. Yes, I absolutely believe that other countries are putting that money in, but again, nothing surprises me. We have people buying $4 and $5 million college quarterbacks these days.
Well,
So
that's true.
where all this money comes from, I have no idea.
Well, and the cost to go to college now is outrageous. It is just totally outrageous. I mean, it's got to the point now. I mean, they do have a lot of income. And also, buy a ticket to a college football game now. You might pay $150, $200 just to get a ticket. I served on the board of several universities for a period of time, and I had an opportunity to see how much money the football brought into those universities. And I mean, one of the universities I was on, it was over 100 million a year. So, I mean, they were bringing in a lot of money. And so they have money, and then you have all the supporters. But I'm going to flip to something else real quick. I'm going to flip to all of our guys out there, like this guy that I just met with, they're out there they're not looking for billions of dollars. They're looking for a few million. Okay, so where do they go to get that? So I kind of did a little bit of study on last year in 2025. Some of the top companies that did deals that had a 25 million or less valuation. Okay.
Okay.
So that's a whole different ball game. And
Yes.
and there's a company called Jumpstart Ventures that funds a stage, A being, the seed funding for companies. They do deals under 25 million. There's another group, it's a London-based company called Verb Ventures.
Okay.
And they do the same thing. And then there's Schema. They're located in San Francisco and they do it. Also, there's a company called Gilgamesh Ventures, and they focus on the fintech industry, which again, fintech is computer software support for financial institutions and whatnot. And then there's a company called Harper Count, and they do deals. And there are a few others out there, but there are companies that would look at an early stage company, and most of the things there. And then I went to see, where was most of the money put? Where were the investments made? And it was made in the following: AI, even the small AI, deep tech. They call it deep tech. We have to see what all that includes. I'm not 100% sure on that. B2B continues to be a major area for investors. Climate tech was one that
Mhm.
showed up. Health tech, and of course fintech again. Those are the areas that have been the primary areas. So I think in talking with some of our people out there that are listening, they don't fall into this category. Okay, this is not, and I mean, now the guy that called me the other day, he does a little bit because he's into the health tech side. So, and he has built a very successful, profitable business that he thinks he can grow over 30% a year. So he's looking to take that company public. Now that is one that is, the guy he is listening to us, but there are a lot of people out there that, Dave, they're in businesses that are absolutely 100% needed for us to live the lives that we live in America, and that includes every kind of business out there, from landscaping to roofers to plumbers to you name it. Hey, by the way, I got ripped off from a plumbing firm over the holidays.
Oh no.
Yeah, yeah, I got to tell this. I just it just hit me, but I had a one of our bathtubs, and I have daughters, and they have long hair, and
Yes, I have the same issue.
so it got stopped up, right? So the guy came in, and he said, It's going to be, yeah, I'm just going to tell this. He hit my wife and I for over $300 for that drain, and we
Mm,
thought it was some major issue, right?
right.
He went in there, and he was out in 10 minutes.
Stuck his little deal down there, pulled it all out, and
And
left.
and I said, "Don't you think that was a little bit much?" He says, "That's what I charge." And I said, "Well, how much would you charge to install a sink?" If we Because we were talking about replacing our kitchen sink with a newer model, $1,100, and
Mm,
that doesn't include the buying the sink. We would have.
right.
He said you'll have to go buy the sink. He wanted $1,100 to pop it out and connect the hoses and put the garbage disposal on it and do that. And I said, you got to be crazy, man. I said, I promise you, I will crawl under that sink myself with the wrenches and do it myself before I would pay somebody $1,100 to do that. But it's crazy. But anyways, the plumbing business, and it's a business, and HVAC and like I said, landscape and painting and you might be in the furniture. Everybody's got to have furniture, and all kinds of different healthcare services. You name it, it's all out there. But there are entrepreneurs in every single area, and not all of those look like they might be some attractive area that you can go out and raise, some huge amount of money under some AI deal. But I will say this: I don't care what business you're in, if you can show that that business is going to grow substantially and you can continue to grow it and you've got the expertise to go out and get the clients and grow it, there are people out there that will invest in that business. And I know that for a fact. I've seen all kinds of businesses get funded. And so there are funds, angel funds and other funds out there that people will put money, but again, we're back to don't over diversify. Make sure everything is fully integrated. Make sure it makes sense. Make sure you got the right team. Make sure you put it all together. Make sure you truly can scale this business. And you'll find that there are investors out there. It doesn't have to be AI or high tech.
Yeah,
So
no, there's definitely opportunities, especially now if you're looking for them, with a lot of businesses that will change hands over the next decade. And we always want to remind people they can email in info@scrushyonbusiness.com, just like the listener Richard talked about that reached out to him and got some insights into his business and potentially taking it public. We can get to some listener questions here in just a second, but first I want to tell you about DraftKings Sportsbook, an official sports betting partner of the NFL, which of course makes every playoff moment feel bigger. We are at that time of the year where every everything now is bigger, and the playoffs, of course, one game you're out. We've got a lot of road favorites coming up this week, including one double-digit road favor with the Rams and the Carolina Panthers. A lot of action, and DraftKings has your back with early exit protection. If the player in your eligible NFL prop bet goes down at any point in the first half, you still get paid in cash. So you've got that back up from DraftKings. Download the DraftKings Sportsbook app and use code Scrushy. That's code Scrushy, SCRUSHY, to turn $5 into 300 in bonus bets if your bet wins. In partnership with DraftKings, the crown is yours. Gambling problem? Call 1-800-GAMBLER. New York, call 877-8-HOPE-NY or text HOPE-NY. Connecticut, call 888-789-7777 or visit ccpg.org. On behalf of Boot Hill Casino in Kansas, wager tax pass-through may apply in Illinois, 21 plus in most states, void in Ontario. Restrictions apply. Bet must win to receive bonus bets, which expire in 7 days. Minimum odds required. For additional for additional terms and responsible gaming resources, see dkng.co/audio. Limited time offer. You into the NFL? I know you love college football. Like the NFL and Houston's chances? Richard?
Yes.
You like those Houston Texans?
Oh gosh. Well, I mean, you can't. I mean, I have to support them, right? I live here. And I do go to some games. I had a friend that's got a box, so he'll invite me every now and then. It's on the 50-yard line, and I'll tell you, love it.
Look at you. Yeah, the Pittsburgh Steelers is who their opponent will be, and can have a lot of fun with that with DraftKings. We thank them for supporting the show. All right, I mentioned listener questions. A lot of the ones that we got over the holidays had a similar theme, which was something you kind of talked about a little bit earlier. When you're an entrepreneur, you have that mind, but you're working. You have a full-time job. You want to be able to get out of that full-time job to be able to chase your passion, your dream, the idea of entrepreneurship. And a lot of people ask a simple question: when do I stop the one and go for the other? What would you say to people who ask that question?
I would say that once you have tested it and you know that you have you can build the revenue stream and the profitability to be able to fund whatever your family's needs are to pay your bills and support yourself. Now, sometimes, you get the business is a good business and you're able to get financing. You're able to get investors, meaning, people put money in and if let's say that you have let's say, and let me use something simple. Let's say you have one store, and let's say you're going to build, and I'm going to use hardware stores just for or restaurants or what, it doesn't matter. Let's say that one store, you get it, and that's a concept, and you're doing this on the side, and you've got another full-time job, and you get that store to profitability, and whatever the concept is, whatever it is, whether it's like I said, hardware, some kind of restaurant, health restaurant, whatever, but it's making money and it's proven. Okay. And you're doing that on the side. And then you say, well, you know what? And you look at the demographics and you say, this business can be successful in this demographic. It needs to, this is my demographic. It's making money. It's got a really good margin, 15, 20% margin, whatever. I want to build 100 of these. Okay. So with that model, you probably, if you had at least one, possibly you've built a second one, but you could probably raise money. And it might not be making enough money to fund your family and grow the business at the same time. So if you can add in additional investors, you're going to have to take some dilution, but bring in a partner or put more money in. Then you would find yourself using some of that money to pay your salary. You put yourself on a payroll. Now when I built Health South, that first year I didn't pay myself anything, but I did have to pay my other people that I hired in the business, but I used my own money. And then I was able to raise venture capital. And then once we had venture capital raised, we put our board of directors together And we still were not cash flow positive overall because we knew that our core business worked because our first facility and our second facility began to start making a profit. So we said, now we can go out and build 100 of these. And we know what the margin's going to be. So 100 of these is going to generate X amount of dollars on top line, X amount on the bottom line. So we started taking a salary. But when I started putting the company together, I was working. I had, working for another company. So once I had the business plan put together, I had everything laid out, and then I was able to use my own money to finance, and then later venture capital, I was on my own. But I think you just have to either have the financing to pay yourself and cover your own. You can't be totally stressed out, broke out here trying to build a business. It'll never work. You've got to have income. You got to take care of your family and not be worried about that so that you can put 100% of your efforts focused on your business. So when you get to the point that you, through either bringing in a partner, through having bank financing, or you have enough money of your own to put into it and get it started and prove the model, then you'll know. You'll know. I mean, Dave, you'll know, okay, I got this covered. I can now drop that other job, go 100% on this. Uh, Now, a lot of times people will start a business on the side and it'll fail. And they'll be so glad they didn't quit their job.
Right.
'Cause they thought it was a great idea and it turned out it wasn't.
Yeah,
See,
I would say the truth is people probably generally do it too early. Wouldn't you
mm,
think? They're
yeah,
excited. You want to get out of that company. You're working for the man. You want to get out of there, and you're really trying to do everything to get out. But as you said, you really want to think about, are you not just okay for now, but are you okay for a year from now, 2 years from now? How you have that set up and planned before you leave that regular income.
yeah, timing is important, and but I think most people will know. I think they'll see it. They'll know, well, this is working, or they'll know it's not working. I mean, I've seen. Look, I see it all the time, and you do too. I watch in these retail centers. These developers will build these retail centers, and they'll have like 15 different storefronts, right? And all of a sudden, you'll see this restaurant, and this little business, and this little boutique, and a flower shop, and a coffee shop, and a this, and all this stuff opens, right? Well, you watch it because like I'll drive by every day, and I'm looking to see if they have customers, and then you see, well, this one or two businesses they don't have any customers, and so over a period of time, you feel like, and then about 18 months later, it closes.
Right.
Well, they've now spent all of their money that they had saved up. That was their dream to get that thing up and running. But here was the problem. They had another job. That other job actually kept them from being able to do what they needed to do to grow that business. So you see, it's if you're working full time over here and you don't have time to come over and take care of this, then this could fail and you could have put all your savings into it. So, yeah, and that's when sometimes people make the wrong decision, Dave. They don't bring in a partner to help them fund it so that they could drop this other job. Now, if that business that you started on the side is truly a great business, and you know it's a great business, and you believe that with all your heart, and you've got some kind of vision that God has given you that this thing is going to explode, drop the other job and go take the risk. I mean, I'm having to come back to this side because I'm an entrepreneur and I don't fear the risk. And if I think that business is good, I'll drop that other job and go full time on this. Because but I've checked it out and I've verified it, and I know
Right.
that it is in fact going to be very, very profitable. And I believe a 99% of and I'm in. I believe it's going to be very successful, and I already see how it's going to be successful. So I've got that mapped out in my mind and in my plan. So it's really, do you have to quit the job to be able to give it the energy that it needs for it to be successful? But again, I'm riding by these places and I see them open up and I see them close. And I'll tell my wife, I'll say, you see that place right there? It's not going to make it. And that usually doesn't. And I saw a beautiful, beautiful Italian restaurant that opened. And Leslie and I were driving down the highway, and I said, Leslie, you see that Italian restaurant back over there? And she said, yeah, I think I see it. And it was a horrible, Dave, location. a horrible location. Matter of fact, you couldn't really see it well from the highway. You wouldn't even know it was there. And the name of it, if I told you the name, you'd think, why would you ever name an Italian restaurant that? It was horrible. So I've been driving by it, and yesterday I drove by it. They had three cars out front at lunch. Now, Dave, I'm here to tell you, if you only got three cars in there and it's 12:30,
Something's wrong.
you're not going to make it. It's not going to make it. And they got this big building, and I see it, and I'm thinking, so every time I go by there, I count the cars. One time it had five. Okay. You can't pay the rent. So how long will that owner be able to? And it's not a chain. This is a one-off. There's no way that he's going to be able to sustain that unless he's a multimillionaire and he just wants to, and he's just funneling money through there for the heck of it, using it as a tax deduction or something.
Yeah.
You see what I'm saying? So location, management, all of these things are important. So if you're going to build a business and you're going to put money in it, you got to decide, can I leave that? When can I leave it? How much time is it going to take? How much energy have I got to put into it? What's it going to cost me? And all of that. You just don't jump out there and do it. And you got to make sure that those things, everything is in place. We beat that to death, but that's really the bottom line.
Yeah. And you mentioned something about this in your answer. So I want to finish on this one this week. Mark from Pittsburgh had written in and asked, how do you deal with fear of failure when starting something from scratch? That fear is going to be there. If you're not nervous about it, there's something wrong. But Richard, how do you tell people about that fear of failure when you're starting a new business?
If you're really afraid that you're going to fail, you probably shouldn't do it. I'll be honest with you. I've never been afraid to do what I did. And if I was afraid to do it, I probably didn't do it. It's kind of like, there's certain things in life we come across that we are afraid to do, and it's like pulling out in traffic. You got to make sure you got a clear place to pull out and everybody's going 80 miles an hour. You you want to make sure that you're comfortable doing it. And because if you're afraid and you got that, you probably, that's not what an entrepreneur, I mean, he's not going to go do something he's afraid to do. That's a real entrepreneur believes in what he's doing and really doesn't have any fear and is not afraid to take the risk of building a business. And I truly believe that. And that's why they're able to do the things they're able to do, because and in their mind, they're convinced that they're right and that they can achieve what they're doing. And so they stay at it, and they have the persistence and they have the ability to work at it and really hard and to sell it and explain it to people and prove it and get it to profitability and show people that, I'm right about my idea. And I had that, and I had it in several businesses that I was able to start. I built a construction company, and I developed properties that were resort properties, and was very successful in that. Sold every one of them. Made a lot of money doing that. But I bought an expensive piece of property with a huge lakefront. I built out all of these homes in that area, but I had estate lots that I built, and made a lot of money doing that. And so some people have said, I can't believe you spent that much money and bought all that acreage down there on that lake. And well, I believe that I could do what I did. And so that's just another example. Same thing for the drug companies we invested in, and built that and sold it to a huge pharmaceutical company, and the medical management businesses that were all the different things. And even my wife building her pajama company, was unbelievable. She was in 42 states, and she had, gosh, I think 250 boutiques around the country that were selling her pajamas, and she never looked back. She just was like, this is a great product, we still have people. We had a lady called her yesterday and was talking about still wearing those pajamas, loves those pajamas.
Mhm.
So I'd love to see Leslie get back in that someday, because she made a great product. But anyways, yeah, you if you're afraid to do it, you probably ought not to do it. That's the way I feel.
We'll end it there for this week. We thank everyone for writing in their questions. Again, info@scrushyonbusiness.com. Follow us on social media as well. If you're watching on YouTube, hit that subscribe button and the bell notification so you know when new content has come out from us. And we will be back next week, answer more of your questions, talk more about building your businesses. And Richard will give you the final word.
Well, I just, again, wish everybody a great 2026. I hope you have a wonderful, wonderful year. Work your plan, work your dreams, and just keep moving forward.
We'll see you all next week on another edition of Scrushy on Business.